For more, let's bring in Julie Biel, who's the Chief Market Strategist and Portfolio Manager at Kayne Anderson Rudnick and a CNBC contributor. I love this. It resonates with me. It's like, all right, show me the money. What are we going to do to see a return on this investment, Julie?
Yeah, I think it's pretty staggering when you think about the billions of dollars that have been invested in terms of maturing this technology. And right now we're still at the infrastructure layer. But at some point, many investors are looking at how these companies are spending their CapEx dollars, and they want to see a return on investment. And so far, where we're seeing AI technology really having a benefit is it's just making things more efficient. But that's not really what's going to drive a lot of economic output. You really need revenue generating opportunities in order for enterprise to really get excited about this kind of technology. And I think until we see that, you could see greater and greater skepticism around investor appetite for this level of spending. It's pretty exceptional.
Let me put it to you another way. Do you suspect that this is in any way an AI bubble, that it's just that there are use cases and we're going to see them unfold, but it's just not ready to see the kind of returns that some investors may be expecting?
Yeah, I think that's a great way to put it. I think that the long-term outlook for artificial intelligence is very strong. It's existential in how it's going to impact how we talk to each other, how we do work, how we relate. But I think that right now, the problems with hallucinations, the data walls that they're hitting in terms of running out of good data to be able to train these models on, it gives me some hesitation about what the near-term outlook is. But we're still spending really aggressively. And so that mismatch has to be resolved pretty soon, because I think investors will eventually start to lose patience. We're not the most patient bunch, I would say.
We've seen housing market sort of frozen in large part because mortgage rates have sort of stayed so high. Where do you see that in terms of investment opportunities for 2025?
I think housing is such a critical market, right? Because so many average Americans see their house as the primary asset that they have. It's where they derive a lot of their sense of their own wealth. And I think the challenges that we have right now is a real mismatch in terms of the inventory that's out there and what people are willing to pay. So many of the less expensive houses that were out there really got sucked up during 2020 and 2021 and flipped. And now you have this entry-level buyer that doesn't have a lot of options in terms of where they can find the right kind of house. I think this is going to favor the entry-level home builders like a Dreamfinders Homes for the next year, particularly if interest rates remain a little bit high.
Okay, so I see, yeah, I mean, the Dreamfinders Homes is one of your likes. You like advanced drainage here from WMS. Why?
Yeah, I think when you think of a portfolio, I think a lot of portfolios today have more tech exposure than they may even really recognize or realize. And I think it's important to complement technology with slightly less cyclical, less sexy industries. Advanced Drainage is a company that focuses on, infrastructure, water infrastructure, which we all know needs investment. And it has more earnings durability through an entire market cycle. And I think that that's an important complement that you want to add to your portfolios. You don't just want your high flyers. You want things that are your steady eddies that can really support portfolio returns through an entire decade.